With the U.S. markets closed for the weekend, we are looking at the final explosive figures from Friday, November 7th, 2025 for Datavault AI Inc., ticker DVLT. The stock finished the session at $1.69, an absolutely massive gain of 24.26% on the day. That's a 33-cent move on a sub-$2 stock. The after-hours session saw it climb even further, adding another 4 cents to hit $1.73. But this closing price is the calm after the storm. To understand what happened on Friday, you have to look at the volume. An almost incomprehensible 62.58 million shares changed hands. This is not a drill. This is a full-blown frenzy. The stock traded in a wild range from $1.23 to $1.72, meaning at one point it was up nearly 40% from its low. The immediate expectation for a stock like this, a nano-cap company most investors have never heard of, is that this is a classic pump and dump. It's the kind of alert that pops up on a Robinhood stock trading screen. You jump in and you pray you're not the one left holding the bag. The assumption is that this is all hot air. But the reality is that this 24% surge isn't based on a vague rumor. It's the culmination of one of the most aggressive and complex barrages of corporate news I have ever seen from a company of this size. Datavault AI isn't just surviving, it's in an all-out war with short sellers and is carpet-bombing the market with announcements. The common belief about stocks under $5 is that they are pure speculation. They're lottery tickets. You see a name with AI in it, you see it ripping on your SoFi Invest app, and you place a trade. This is the self-investing equivalent of a casino. The general narrative is that there is no there there. And to be fair, when you hear that one of the company's recent announcements involves a partnership with a comedy club to create joke tokens and a laugh index, that initial belief feels pretty justified. It sounds like a parody of a tech bubble. But to stop there, to dismiss it as just a joke, would be a massive mistake. The challenge to that entire narrative is the sheer volume and complexity of what the company is simultaneously attempting. This isn't just a joke token company. In the last 2 weeks alone, Datavault has announced a $10 million licensing deal with Scilex Holding Company for tokenizing genomic and medical data, a partnership to transform music data tracking, an impending meme coin distribution for its shareholders, and a partnership with Rodney's Comedy Club. This isn't a single pump, it's a full-on strategic campaign. And just a week before that, on October 31st, the company issued a formal, aggressive response to what it called a malicious short report from Wolfpack Research. That 62 million share volume on Friday wasn't just buyers, it was a war. It was short sellers, retail speculators, and long-term believers colliding in a way you almost never see. Let's dissect this price action because it's the key. The 52-week range for this stock is 25 cents to $4.10. It is the definition of volatile. That 62 million shares of volume is astronomical for a company with its market cap. This tells us that liquidity has poured in. But who is trading? It's almost certainly not the big, slow-moving institutional funds you'd find at Fidelity Wealth Management. This is the fast crowd. This is high-frequency trading algorithms, retail traders on the Robinhood app, and momentum chasers using platforms like Interactive Brokers to get in and get out. The days range from $1.23 to $1.72 shows this battle. The stock likely gapped up on the momentum from its recent news. The short sellers tried to beat it back down, and a wave of new buying, potentially triggered by the meme coin announcement, overwhelmed them. The announcement of a Dreambowl draft meme coin distribution to all DVLT and Scilex shareholders with a record date of November 14th is a brilliant, if cynical, corporate maneuver. It creates a synthetic catalyst. Anyone who wants to receive this coin must buy and hold the stock through that date. This forces shorts to either cover or risk being caught in a squeeze. This isn't fundamental analysis. This is modern market warfare. This is a company using the language of meme stocks against the very people, short sellers, who accuse it of being one. It's a fascinating, high-risk strategy that has, for now, resulted in a 24% stock pop and put the shorts on the defensive. So what does Datavault AI actually claim to do? This is where it gets incredibly dense. The company describes itself as a Web 3.0 infrastructure company focused on AI-driven data monetization and tokenization. It's essentially trying to build the plumbing that allows companies to turn their data into tradable assets. They have two main divisions. The first is data science, which includes its flagship products Datavault Bank, DataScore, and DataValue. The idea is that these AI-powered tools, which are being built using IBM's watsonx.ai platform, can analyze a company's data, score it for quality and compliance, and assign it a real-time financial value. The second division is acoustic science, which holds patents for things like ADO, a data over sound technology. This is where the Comedy Club partnership comes in. They claim to be able to copyright a joke in real time and even create a laugh index by analyzing the room's audio. It sounds wild, but it's part of a much larger and frankly almost unfathomably broad ambition. The company is trying to tokenize everything: jokes, music, genomic data, name, image, likeness rights for athletes, political ad data, and even carbon credits. They have announced plans for 4 separate independent data exchanges to trade these real-world assets. This is not a simple business model. It is arguably one of the most ambitious or perhaps unfocused business plans on the entire NASDAQ. This level of ambition brings us to the future outlook, which is a true binary. The bull case, and the reason someone might open an individual brokerage account with Fidelity Investments to take a long-term position, is that Datavault AI is sitting on a trove of valuable patents in the tokenization space. In early October, the company explicitly stated it was launching an IP enforcement initiative against top-tier banks that it believes are infringing on its technology. This is the patent troll bull case, but with a tech twist. If they can successfully sue or license their patent portfolio to even one major bank, the revenue would be transformative, and the stock's $1.69 price would look like an absurd joke. The $10 million Scilex deal and the 35% royalty from Nature's Miracle are presented as proof that this licensing model can work. The partnership with IBM gives them a sliver of blue-chip credibility that most nano-caps lack. This is what the bulls are hanging their hats on. They see a company that is massively misunderstood, under attack by short sellers, and on the verge of monetizing a revolutionary patent portfolio. They see this as the next NVIDIA stock of the data economy, a company providing the picks and shovels for the tokenization gold rush. Now for the bear case, which is just as, if not more, compelling. The reality is that the company's financials, as of their last major filing, are weak. They are burning cash, have negative earnings per share, and frighteningly low institutional ownership of less than 1%. This means the big money, the Fidelity mutual funds and other large asset managers, are not touching this stock. Why? Because the business model is a chaotic spray of press releases. One day it's a joke token, the next it's genomic data, the next it's a meme coin. This looks less like a focus strategy and more like a company throwing everything at the wall to see what sticks, all while battling a short seller report from Wolfpack Research. That short report, which the company called malicious, likely attacked these very fundamentals, questioning the viability of its technology and the string of seemingly disparate deals. The risk here is immense. The risk is that this is all a house of cards, that the patents are unenforceable, that the deals are just press releases with little upfront cash, and that the meme coin is a desperate gimmick to squeeze shorts and allow insiders to sell stock at a higher price. The risk is that this company, which is trying to compete in a space with giants like Apple stock and every major bank, simply runs out of cash. This is the ultimate expectation versus reality stock. The expectation is that it's a 24% pump on a worthless company. But the reality is it's a deeply complex, high-stakes war between a management team with world-spanning ambitions and a market that is deeply skeptical of its ability to execute. Friday's 62 million share explosion is the battlefield. For traders on SoFi trading platform or Robinhood investments, this is a paradise of volatility. For long-term investors looking for the best investing sites or investment help, this is a minefield. The entire story hinges on one question. Is Datavault AI a visionary tech company building the future of data monetization? Or is it